Preparing for a banking interviews at National Bank of Oman interview? You've reached Candy Mentor, and this video is for you. We'll walk through 15 key questions you're likely to face. For each question, you'll see a sample answer followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. Tell me about yourself and why you want to work at National Bank of Oman. I have built my profile around customer-focused banking, strong controls, and disciplined follow-through. What attracts me to National Bank of Oman is its established local presence, diversified retail and corporate franchise, and push toward digital and relationship-led banking. I want a role where I can combine service quality with risk awareness. My strengths are accuracy, communication, and ownership, and I would use them to help customers while protecting the bank's standards. While answering, focus on a concise career story, your banking motivation, understanding of NBO's local franchise, customer focus, and how your skills match the role without sounding generic. Question 2. What do you know about National Bank of Oman and its role in the Omani banking market? NBO is one of Oman's long-standing commercial banks, serving retail, corporate, SME, and Islamic banking customers through Muzin. I understand the bank operates in a market shaped by Central Bank of Oman regulation, economic diversification, and rising digital expectations. For me, the key point is that NBO is not only competing on products, it is competing on trust, service speed, credit discipline, and its ability to support Oman's Vision 2040 agenda. Make sure to cover NBO's position as an established Omani bank, its retail, corporate, SME, and Islamic banking activities, plus regulatory discipline, digital transformation, and economic diversification in Oman. Question 3. How would you handle an angry customer in a branch or contact center environment? First, I would stay calm and let the customer explain the issue without interruption. Then I would acknowledge the inconvenience, verify the facts, and check what authority I have to resolve it immediately. If it needs escalation, I would explain the timeline clearly and own the follow-up. In banking, the customer may be upset, but we still must protect confidentiality, process accuracy, and policy compliance. In your answer, talk about emotional control, active listening, fact-checking, ownership, escalation, confidentiality, and balancing customer satisfaction with bank procedures and service standards. Question 4. Explain KYC and AML. Why are they important for a bank like NBO? KYC means knowing who the customer is, why they need the account, and whether their activity matches their profile. AML uses that information to prevent the bank from being used for money laundering, sanctions breaches, or terrorist financing. In practice, I would verify identity, source of funds, beneficial ownership, and unusual transactions. Good KYC protects NBO's reputation and keeps the bank aligned with Central Bank of Oman expectations. Be sure to mention identity verification, customer risk profiling, source of funds, beneficial ownership, suspicious activity monitoring, sanctions risk, regulatory expectations, and reputation protection. Question 5. If you were reviewing a retail or SME loan application, what factors would you consider? When reviewing a loan, I would avoid looking only at income. I would assess repayment capacity, stability of cash flows, existing obligations, collateral, credit history, and the purpose of borrowing. For an SME, I would also review bank statements, receivable quality, sector risk, and owner experience. A good lending decision balances business growth with asset quality, because weak underwriting later becomes collections pressure and NPL risk. While answering, focus on repayment capacity, credit history, cash flows, debt burden, collateral, loan purpose, sector risk, documentation quality, and the link between underwriting discipline and NPL control. Question 6. How would you explain current accounts, savings accounts, and fixed deposits to a customer? A current account is usually for frequent transactions. A savings account encourages balances while paying some return, and a fixed deposit locks funds for a defined tenor at an agreed rate. I would recommend based on the customer's cash flow needs. For example, salary and bills fit a savings or current account, while surplus funds not needed for 6 months may suit a term deposit. Suitability matters more than simply selling a product. Make sure to cover purpose, liquidity, transaction frequency, return profile, tenor, customer suitability, and how you would recommend products based on cash flow needs rather than pushing sales. Question 7. What is credit risk, and how does a commercial bank manage it? Credit risk is the risk that a borrower fails to repay principal or interest on time. A bank manages it before approval through proper underwriting, limits, collateral, pricing, and approval authority, then after disbursement through monitoring and early warning signals. In Oman, sector concentration also matters, especially where borrowers are exposed to oil-linked activity, construction cycles, or government payment timing. Strong credit culture protects both profitability and capital. In your answer, talk about default risk, underwriting, approval limits, collateral, pricing, monitoring, early warning indicators, sector concentration, and why credit discipline protects profitability and capital. Question 8. How would you encourage customers to use NBO's digital banking channels? Digital adoption works best when customers feel safe and supported. I would first understand why the customer is hesitant: security concerns, language, lack of confidence, or past failed transactions. Then I would demonstrate simple tasks, such as balance checks or bill payments, and explain security steps like OTPs and password discipline. The goal is not to force digital banking, but to reduce friction while keeping the branch available for complex needs. Be sure to mention customer education, trust, security, simple demonstrations, digital migration benefits, support for less technical users, and maintaining service quality for complex transactions. Question 9. Describe how you would respond if you found a cash or transaction discrepancy at the end of the day. In a high-pressure situation, I would slow down the process mentally, even if the environment is busy. For example, if a cash difference appears, I would stop, recount systematically, check vouchers and system entries, and inform the supervisor according to procedure. I would not hide or guess. Banking depends on trust, so the right response is accuracy, transparency, and documentation, even when customers are waiting. While answering, focus on staying calm, stopping assumptions, recounting, checking vouchers and system entries, informing supervisors, documenting the issue, and following bank procedure exactly. Question 10. What financial ratios or statements would you review for a corporate borrower? For a corporate borrower, I would start with revenue trend, gross margin, EBITDA, leverage, liquidity, working capital, and cash flow generation. Profit alone is not enough. I want to see whether cash conversion supports debt service. I would compare DSCR, current ratio, receivable days, inventory days, and debt to equity against industry norms. Then I would link the numbers to the business model, customer concentration, and collateral quality. Make sure to cover income statement, balance sheet, cash flow, EBITDA, leverage, liquidity, DSCR, working capital, receivable days, industry comparison, and business model interpretation. Question 11. How do changes in interest rates affect a bank's profitability and risk profile? Interest rate changes affect both sides of the balance sheet. If loan yields reprice faster than deposit costs, net interest margin can improve. If funding costs rise faster, margins compress. Higher rates can also weaken borrower affordability and increase credit risk. I would look at the bank's asset-liability mix, fixed versus floating exposures, deposit stickiness, and maturity gaps. Rate risk is therefore both a profitability and risk management issue. In your answer, talk about net interest margin, loan repricing, deposit costs, asset-liability maturity gaps, customer affordability, credit risk, and the importance of ALM discipline. Question 12. How would you cross-sell banking products without damaging customer trust? I would cross-sell by identifying a real customer need, not by pushing every product. If a customer receives salary at NBO, I might discuss savings, cards, digital payments, or a personal finance option only after understanding income, spending, and goals. I would explain fees, risks, and eligibility clearly. Ethical selling builds long-term relationships, reduces complaints, and is especially important in banking because customers rely on our advice. Be sure to mention need-based selling, suitability, transparent fee disclosure, customer profiling, relationship building, avoiding pressure tactics, and balancing revenue goals with conduct risk. Question 13. What is the difference between conventional banking and Islamic banking? Conventional banking is based on lending and interest, while Islamic banking is structured around Sharia-compliant contracts such as murabaha, ijara, or mudaraba, where profit is linked to trade, lease, or partnership principles. For NBO's Muslim customers, the product must meet both commercial and Sharia requirements. I would avoid presenting Islamic banking as just different terminology. The structure, documentation, asset linkage, and approval process matter. While answering, focus on interest versus Sharia-compliant structures, asset backing, profit sharing or trade-based contracts, documentation, governance, customer suitability, and NBO's Muslim Islamic banking proposition. Question 14. What would you do if you noticed suspicious activity in a customer account? If I noticed suspicious activity, I would not alert the customer or make accusations. I would gather the relevant facts, follow internal escalation procedures, and report to the compliance or AML team through the proper channel. Examples include unusual cash deposits, rapid movement of funds, mismatched customer profile, or sanctioned party concerns. The key is to act quickly, preserve confidentiality, and let the designated team investigate. Make sure to cover not tipping off the customer, gathering facts, following internal escalation, confidentiality, AML reporting channels, red flags, and letting compliance investigate. Question 15. If you had a sales target but a product was not suitable for the customer, what would you do? If a sales target conflicts with policy, I would choose policy. Targets are important, but a banking relationship built on unsuitable products, weak documentation, or ignored red flags can create regulatory, credit, and reputational damage. I would discuss the issue with my manager, look for compliant alternatives, and document the decision. In the long run, NBO benefits more from sustainable business than from short-term numbers that create future losses. In your answer, talk about integrity, conduct risk, suitability, regulatory expectations, manager communication, compliant alternatives, documentation, and long-term relationship value over short-term sales. If you are still with us, congratulations. You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.